Welcome back to Closing Bell. Now we're on a fresh start of April, the next quarter two of 2021. So today I want to present on how I will position my stocks and shares portfolio, my strategy for this quarter. And to make this decision, I had a dilemma in the last few days after reading Cathie Wood's Twitter tweet this morning. Her thread was very valuable versus Tom Lee of Fundstrat, and he released a video on Monday, and this video really made me sit and think about what I should be positioning for quarter two going forward. So let me start off with Tom Lee's Fundstrat, and he goes on CNBC quite a lot, and on his last segment of interview he has spoken again and again about the epicenter stocks. When I say epicenter stocks, we're talking about travel, we're talking about energy, we're talking about consumers, we're talking about industrials. These are epicenter stocks which he feels that there's so much more room to run in 2021. He feels tech will be growing, but not as much as the value stocks. Okay, so with the value stocks, he used the new terminology called the face ripper rally. So he's going, what the heck is the face ripper rally? Sounds a bit violent, but no, the face ripper rally, he's trying to stress, put in so much context about how this value stocks have so much more to run. Okay, so he's going to rotation stocks, energy, epicenter stocks. He is calling the S&P 500 in the short term will rise 4,200 points. So there's about 3% rise. 4,200 where we are, around about 4,000 just now. And he is calling big calls. He's been talking to institution because his clients are all institution here. He's got big institution clients like BlackRock, hedge fund managers all asking for his opinion. And he's saying the institution are starting to buy in this quarter from April onwards. They're ready to buy, but they're ready to buy energy stocks, oil stocks, travel stocks, airplane stocks, casinos, entertainment, those stocks where they are also devalued because of COVID-19, but they'll be coming in strong. And he's calling materials, anything. And he's calling the energy still's got about 20% upside, potentially up to the end of the year, a total of 70% upside. And he's calling that some of these stocks may have between, from now where we are, 40% to 100% upside until the end of the year. So this is where it's coming from, with factual, with data, and from what he's speaking to his clients and consensus he's been gathering. So he's been telling his clients to be going into this epicenter stocks, and the rally will be huge. Now let's flip on the other side of the coin and look at Cathie Wood, our all good old favorite retail investor superheroine, Cathie Wood. So she all started today when she tweeted about episode number 94 of her podcast, of her segment that she's released. And guess what? Mr. Elon Musk, with 50 million viewers, had to come in and ask, what do you think of the unusual high ratio of S&P 500 cap to GDP? And there she knew that he had an audience, and she used that as a leverage to create a thread. And this is where she's coming from. So she started off saying the technology-enabled innovation evolving today is dwarfing the exposure to other period, creating good deflation and explosive demand. Battery technology is a good example. EV will scale 15 to 20-fold in the next 5 years. She's going into the EV sector. And then she goes about deflation, long-term treasury yield. Future for cash value probably will fall surprisingly low. A massive head fake in the face of inflation expectation. That's what she's saying. She's just saying that all this information is suppressing the future value forecasting. And when it really happens, and when we find that the face of the high inflation expectation is not there, then the tech rally, the tech information value should be soaring. And then she goes on about the seed for explosion innovation today were planted back in the tech and telecom bubble. She's mentioned this many times. It's not the first time she's mentioned this, but she's mentioned that dot-com bubble, financial crash, all that crash suppressing the technological boom is starting to evolve even bigger. The Internet of Things will evolve even bigger for 2021 to 2030 onwards. She's so bullish about it. She feels that everything, the inflation measure, people are getting paid more, workforce getting paid more, the workforce are getting a bit smarter, the demand is there, people, consumers are wanting it. This will push the technology, push even more, even higher, even faster. And she cannot stress where it's going from. And she says, believe that the massive amount of disruption, innovative and good deflation evolving today is causing the creative destruction and bad deflation everywhere else. And then in the last, she says investor needs to get to and stay on the right side of change, which is disruptive technology change. So as I stand here, Cathie Wood is calling out for technology boom. The hypergrowth stocks will boom. The internet stocks, the semiconductor stocks, the EV stocks, all that change, the money that she's trying to invest, she's trying to help this company grow, will change and get bigger. And now here in 2021, you've got Tom Lee saying that Epicenter, Face Ripple Rally, value stocks will grow. I mean, there's only so much money to go one side or the other. So how does it affect you and me retailers? For me, this is my point of view. This is for education and entertainment. Please make your own research because I'm not a financial advisor. For me, my strategy will be I will be holding 70% technological stock. I'll be focused on core concentration on semiconductor and EV stocks. That is what I like. That's what I believe. That's where I am buying on high concentration volume. And the rest of the 30%, 30-35%, I will be shifting, or I have already shifted into Epicenter stocks. I'm buying some oil, I'm buying some bank, I'm buying some Disney, I'm buying some McDonald's, I'm buying some Boeing, because these stocks are great value still. There's still room for it. End of the day, diversified portfolio on my eToro, and personally my portfolio on Trading 212 and Hungry Links, that I'll start buying a bit oil, I'll buy a bit of recovery type stocks. I mean, I got slated in my last video by viewers saying, oh Alex, you're stupid, Alex. To be honest, I don't really care. I focus on my stocks. I focus on performance this year, and also I'm buying in volume. My technological stock, the last 6 weeks, I've been buying. I've been buying Tesla, I've been buying AMD, I've been buying in volume. I'm holding them, I'm not selling. And with the portfolio I'm holding, I'm also trying to rotate into rally stocks and holding cash. I'm building cash as fast as I can. So I'll be buying only when they are good value. So as you can see on my eToro here, if you follow me on eToro, this is what I use. This, I'm transparent. This is where I've rotated. I've left a lot of hypergrowth stocks. I'm only holding good stocks like the ARK Invest, the Pinterest, the Etsy, the Tesla stocks, Square. Those are my hypergrowth. But I'm holding core now. Berkshire Hathaway, Chevron. I'm holding XLE, OIH, all the oil stocks, McDonald's, Boeing. Those are the stocks I want to hold because I think there's room for run. This is where I am. You can have a bit of both worlds. It's up to you. I am an investor. I can have a bit both worlds and see where I can go. But I feel confident. I think the portfolio is ready to run. So over to you. Leave your comment below and see what you think and which side are you on. Are you on Team Cathie or Team Tom, or you're like me, a bit of both? Nothing wrong with that. It's like end of the day, you make the choice, retail investors, and make sure it's a good quality company. Thank you very much. My name is Alex Ko. I hope you enjoyed this segment. Please like this video to help me grow my YouTube channel. I would really appreciate that.
I hope you enjoyed that video. Please like this video and subscribe to the channel. Please press the bell button. Ding dong. Finally, watch the recent video up here.